What's up? So this one is the Great Depression crash, and I just wanted to point out uh, what it looks like. We get pretty similar shape to what we're getting now. We get a steep dead cat, and then we get a little slingshot out here, and the uh, the numbers are actually pretty close. I think ours went from 37 to like 22 or something. This went from like 38 to 20. But the timeline's pretty different here, and yeah, so we're starting here in September, October, November. So almost 3 months to get the crash, and our down move only took about one. But this little slingshot move out looks pretty similar to what we got here, kind of just a bump and like a little rounded looking top. And so the timeline on this guy, November, December, January, February, March, April. So ours is what, 3 months? This is like 5 months to get out here. So it took like almost 3 months to get down and like 5 months to get out. Um, so proportionally, I guess that's sort of close to where we are, but we just took like a month down and we bounced a lot higher than this. And it's not, not exactly this shape, but it's pretty similar. Um, but a lot of people are saying the economic conditions of our crash are pretty similar to the Great Depression, which maybe true. Yeah, I mean, like the balance sheet in the Great Depression was very similar, the unemployment rate. Um, but the currency, I mean, this was not a world currency. This was just the domestic American currency. It was mostly gold backed and backed by corporates. And so let me just zoom out and show the rest of this thing. So this is what it did. It did this move here, and then it went just bear, bounce, bear, bounce, 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 down to 40 so if our crash were to look like the Great Depression, I mean, that would put the S&P down at like 450 or something like that, crazy number down there. And I have kind of the bottom of the everything bubble at about 12, maybe somewhere in this range or something, if this was to be sort of an analog to our crash. But you can see though the dead cat and the slingshot out here looks pretty similar, and then it just kind of turns over before it gets into a longer bear market. And our timeline seems to be quicker than this, and we don't know if we're getting inflation or deflation. There's a big argument about it, and whether or not inflation or deflation would be good for the stock market. Most people say inflation would be good, but I was looking at Ray Dalio's charts of sort of the collapse of world reserve currencies, and there's usually inflation at the end and collapse in equities when a world reserve currency ends, like looking at the Dutch guilder and things like that. So the Great Depression's not the best analog, but you can see the shape here, and potentially, what a real like sovereign debt bubble bear market actually looks like. You get kind of the liquidation, and then you get your slingshot, and then just a long term, uh, just a really crazy bear market, 350 to 44. That's crazy. So yeah, I think we started at 3,800 or something like that on the S&P from the top of Feb 20. And yeah, this whole thing took about 3 years to play out. And then it was like a little dip, and then it went to a higher angle trend line over here. Kind of went down, and then it went up that way. And so anyway, that's a look at the 1929 crash. And what everyone calls the Great Depression is this whole time period down the backside of this bear market, plus this little dip here. Well, I guess this is the bottom actually here. It probably went up like that. Um, but they count, I think, until like 1933 sometime. They count as the Great Depression. And so it was this whole bear market. That was the Great Depression, and it was a deflationary sovereign debt bubble popping. And the beginning of it looks pretty similar to what we have here. So that's just a look and not investment advice. Like button, subscribe to the playlist, whatever. Yeah, happy trading.